Hey everybody! I got we had a post earlier in the group of someone wanting to know about moving from stocks to bonds today, swinging out basically in the swing trader group. I want to cover a couple of things here to let you know what some of the there are some pros and cons about making such a move today. Today being the 19th of August. Um, I'm going to show you a couple of things in the chart because right now the earnings season is on the is pretty much dead until October, and now we're starting to move into where it's more technical and speculative traders moving the market. But either way, there's some little things I want you to be able to watch for before you decide on making any kind of moves. This might help you. This might affect your decision that you might already have in mind. So keep this in mind, and we'll, you know, I don't know, see what you see if you can learn something from this. Okay, guys, we're going to start off with S&P 500 chart. It's SPX. Current price closed at 44.05 today. I did try to get this recorded earlier, but things happen. All right, I'm going to start off with change my aggregation period here to 6 months. So we're looking at a little bit shorter range here. All right, so first thing I want to talk about is trend line analysis and show how how basically it's at about the bottom of the trend line right now. You can kind of visualize right now, but I'm going to go ahead and draw a trend line now. Go to drawing tools, and then the second one here to the left. The second one from the top on the left side is the trend line tool. This is the Thinkorswim platform for Ameritrade. For those of you guys who aren't really sure what this is, okay, I'm going to come over to this bottom here and tap, double click, single click, left click, whatever. And this trend line here is what I'm more interested in. So I'm going to try to follow that line up. Okay, now so we don't have confusion between my 50-day average and that. I'm going to color that white instead. All right, so now what you have here is it looks like it's following a trend right up. It might be able to go down just a little bit lower, but yeah, because if we go for a shorter term trend, maybe from here, either way though, it doesn't look like it's going to go much lower before it hits that trend line. Let's go with how about orange on that one? Okay, as you see here, this channel, it's this trend here is 43.50ish, somewhere in that ballpark, 43.50, 43.60. If you really want to zoom in, we can, and that's in the 43, 42 range there for the slower trend, and then for the faster trend, 43.60. So anywhere in that 43.50 neighborhood is where I would expect it to possibly bottom out based on just trend analysis alone. Okay, so now a couple other little things here I want to talk about is the RSI, or Relative Strength Index, and then the MACD, or Moving Average Crossover, Moving Average Convergence and Divergence indicators. Um, I don't recommend putting too much faith in any single indicator, and I'm going to show you, at least on the MACD, some of the fallacies of following it on its own. And also, like even right here with RSI, I have 70 and 35 as my parameters. Normally 70, 30 are the parameters. I'm going to go ahead and change that just so you can see. Generally, this is what people use for overbought and oversold conditions. But it's in bull market conditions, you don't tend to see you don't tend to see it reverse directions on at the bottoms that low. Usually it gets down to about 40, maybe 35 at lowest before it bounces, at least from what I normally find. Except for some occasions where it might drop down lower. If I go down, go more than 6 months out, you're going to see that in effect. But just in the last 6 months, there's not one single time using my numbers here. I'm using Wilder smoothing too, though. I can also even change that. average type. I can go to simple, and let's see what happens there. Okay, so there are some spots here where it hits 30. Hits 30 down here, but it wasn't the very end of that drop. Wasn't too far away from it though. Right down here is where it bottomed out, and so this isn't necessarily an indication that it's time to buy in, but it's probably pretty close. And here you start getting oversold or overbought. There was a short-term top there, but it never got down that far to the bottom there. Looks like 42 was as low as it got there. I'm looking right there before it went back up. And then it sat in overbought conditions for an extended amount of time and never actually dropped. Maybe just a very small amount, nothing that would do you any good as a swing trader making moves on that at that time. And yeah, but eventually it did drop down to here. It did get a little bit of a drop that would have worked out well. But generally, though, you see there are times like this here where it gets way up, even up to almost 100, 97, 64, 21, and it still continued upward. Before we found a top right over here. So RSI alone, I don't recommend you follow it too closely. It's a good idea. It gives you a good idea how close we are to being overbought or oversold, but it's not generally a good indicator by itself to use. Usually, no indicator by itself is ever a good one to use to make your decisions on. Okay, we did get overbought not too long ago, right here by the top at 44.80. And it's drawn back down. You see, it's got down pretty fast to 41.90.52 right here. So we're already down in the neighborhood where we could start seeing some buy-side activity soon, which corresponds with that trend line there. This doesn't even factor in other things like possibly Fibonacci retracement levels, Bollinger Bands, or a lot of other technical indicators that a lot of tech traders like to use. These I just go glance off really at RSI and MACD, particularly myself, and just base and focus more on the earnings fundamentals first. What do the earnings tell me the index is worth first, and then look for one. If I see it as at a high, like a saturated or low value, then I can use tech indicators here to tell me, all right, now might be a good time to buy in. All right, that covers RSI. Now I want to talk about MACD. You have two different sides here. You got the signal and indicator. I can't remember what the other one is. The indicator line. The blue line is the faster line, and so when it crosses underneath the yellow line here, that's generally an indication when it's time to sell, or at least that's what the logic is. But it doesn't work so well because if you look right here where it crossed under right here, look at what the price was at that point in time on that day. It was 38.76.50, which is looking right here where the C is at. So that day was at 38.76.50. Next time it actually crossed above, it almost crossed right there. We can almost say that. Just for the hell of it, let's just say it did. Well, right there it's at 39.62 and then 39.74. So by the time it crossed back up, your price was already back above the price that you were at previously, 38.62 or 38. What was it? 38.76 to 39.68. So 39.68 divided by 38.76. That was already up over 2.3% by from your original price by the time it would have given the indication to buy back in. And even then, it was a really weak indicator. It didn't really cross back over until right here. And that was at the 40.19 level. So we're actually we're rounding up. We can say 40.20. Divided that by, what was it, 38.76? That's 3.71%. So you would have lost a lot of money, a lot of shares right there. Would have lost 3.7% of your shares that you originally had by making moves based only on this indicator here. So again, be careful when you're following these trend lines here. Don't use these solely as a basis to make your moves. You will get burnt on them frequently. All right, if you are going to look at MACD though and rely on it more heavily, I recommend using the histogram right here. As you see here, you got the brighter red marks, and then they start getting darker. It's basically when it's getting stronger and stronger, it's more bright. And then when it loses its strength and starts turning the other way, it gets darker red. And then the same goes with green. It's bright green as long as it's trending upward. And we'll look at right there, kind of topped out short term right there, went sideways for a bit there, and then finally went down. And right here was the bottom, or at least on the, as far as the histogram was concerned. And that was a short-term low as well right there. Well, okay, it wasn't really the real short-term low. Right here at the 40.63 level was the real short-term low. But this wasn't too far off, 41.15, but that was still a good 1% above that close there. But from here, it was a nice uphill run. All right, so personally, if I like to use MACD, I specifically like to use the histogram, particularly when it's bright green or bright red. Is when it's getting close to time to make a move, if at all. This is only if you're going to be a short-term trader. If you're a buy and hold investor, I don't recommend worrying about this stuff. This is just solely meant for those of you guys who like to play short-term games. All right. Also notice here that the general volatility, even with just the MACD, there were more prominent gaps here between the signal and indicator lines, as well as how far up or down from zero the histogram actually went. And what you're seeing now from actually right around the beginning of July to now, you're not seeing so much movement on either direction. It didn't go up as high here. Looks like 7.64 versus right here, it was up at 19. So it didn't go anywhere near as high here before it topped. And this really was a short-term top too, right in that area. And down here, it barely even went into the negative at all before it rebounded. So even then, even here, this is one of those things you got to watch out for. If you're just a little bit too slow to move, it can make a big difference, especially when you're dealing with TSP, where all you get to work with are end-of-day prices, okay? So right now, we're not seeing a lot of volatility here, not much movement in either direction on the histogram, and the price movement as well. It's not super strong. You're not seeing larger, like say this candlestick right here is a larger movement between the bottom and top of that same day. Very little activity there. This can also be a telltale sign of less volume as well. And we can't give you good volume indication from the S&P 500 itself. So what I'm going to do after I get through talking about S&P is move over to the S&P futures, which I can actually show you volume information. I do want to show you something else here on the S&P chart before I move on to that, though. And that is to talk about how much a typical drop in price is. A typical drop in price on a normal bull market condition is about 3 to 5%. And you're going to see here that most of these dips I'm going to show you here are right in that ballpark. I'm going to first start with, I'll go back about, we'll move on. We'll get to this one in a second. And I'm going to show you why this is not a good time to be selling, moving back over to bond funds. You would have been better off making that move early, like right here or somewhere near the top right before it dropped or at the very top. Because only one time a day. Remember, it could be rebounded during the day and bounce back up before you have a chance to even do anything about it. But let's first start with right here. Find our short-term top, which is right there at 43.84, and the short-term bottom was at 42.58. So let's look at how far this drop was. 42.58 to 43.84. Okay, subtract 1 from that, and you get a negative 2.87% drop in price from top to bottom, at least on the closing price. So that was pretty close to the 3% number I was talking about earlier. I'm sliding over. Okay, so it didn't quite make it to 3%, but it was pretty close. And these indicators, well, the RSI got kind of close, and again, with bull market conditions and this being July, right in the thick of earnings season, I would not have expected it to to give much technical indication here of a time to buy yet. And they were pretty close to giving buy indicator. Actually, this was more of a sell indicator here than anything, but quickly turned around right before it crossed under. All right, let's move to this one here. It's this looks like it's the short-term top, possibly 42.32, and this one here looks like it's going to be the short-term bottom at 40.63. So let's do the math on that one. 40.63 divided by 42.32. Subtract 1, and you got a just about 4% drop in price from top to bottom before it rebounded and rallied back upward, right inside that 3 to 5% range I talked about. All right, we can look at others. This probably won't be as much, but we can still take a look just to know what the tendency has been over the last period of time. I've got 39.68 there, and this is probably going to be the low right there. It was 38.89. So 38.89 divided by 39.68. That was right at about a 2% drop, so it wasn't very much. This is one of those cases where, so you were getting RSI indicating overbought, but this was just barely crossing up like it was a good time to buy back in, possibly. And so it was kind of a fake there. It's, but really down here when it was turning, when the signal line was starting to cross back, move back toward the indicator line, was a better time to move that money back toward stocks. All right, so I'm going to go out to 1 year as well because there is a lot more to work with here than what is visible here. I think let's zoom in on this here real quick. 39.34. Okay, that one I already looked at. I remember that price. All right, so this was the 38.55. Let's take a look at that one. 38.24, 38.51, 38.53, 38.55. Okay, so the short-term high was 38.55 and the short-term low was 37.14. 37.14 divided by 38.55 is negative 3.65%. So it was right inside that 3 to 5% range I talked about. And moving over here a little bit further, this is going to be a little bit more of a steep drop, but also keep in mind this was in September and October and into November when there was a lot more concern about COVID-19 effects on health and economy and all that kind of stuff. When cases were starting to build up, skyrocket more. So more concern there, and there's more volatility. You're going to see a larger drop there. So not going to really cover that because more interested in knowing what typical drops are. And now with that in mind, let's talk about what the current drop has been so far. So 44.80, we don't even have to zoom in on this. We can see that 44.80 on the 16th was the high. And looking over here was 44.79.71. We can round that up to 44.80 still. And the current price is 44.05. So 44.05 divided by 44.80. That is a 1.67, and it was actually up above 1.7% drop earlier because it actually got down below 4,400 earlier today. All right, so anyway, I normally say if you're going to make a move toward bond funds and for a short-term swing trade type move, the best time to do it is when you're within 1% of the short-term high. You don't want to move out too early and then have it move back up, because if you only get like this 2% smaller drop, I think like that one was, or whatever it was, or maybe that one, I forget. Then by the time the price bottoms back out, you're going to be lucky if it even gets back down to the price you sold back out at, or sold out at. And then if you take too long, the longer you take below that high point, the better your chances are going to be of getting whipsawed, where the price goes back up as soon as you get through leaving. So for that reason, I recommend being careful. I don't really recommend moving out at this time. It could drop more, but you're taking a higher risk that you might get whipsawed just because it's already dropped so far below the recent high. Like I say, it could drop more, but why take that risk when worst case you write it out and then you keep the number of shares you already have. If you end up selling out and then it jumps back up on you and you're forced to buy back in, you're going to end up buying fewer shares than what you sold out, and that's going to hurt your account performance. Okay, there are plenty of other indicators, technical indicators you can also use, like Bollinger Bands or Fibonacci retracement levels, and a lot of other things that you'll see a lot of technicians use. You might see, or moving averages, as I use a lot myself. Just keep following the group with other people who are more into the technical analysis part. They might cover some stuff that I don't. Also, even grow my thrift savings plan. I know Jerry talks a lot about some of the indicators that I don't pay attention to, like Elliott waves and Fibonacci levels and stuff. I'm not too concerned about those. I'm more interested in what the earnings data is telling me, what the price is actually, what it's actually worth, and not what the market's actually putting at right at the time. So that's why I'm not going to focus so much on that. There's plenty of other people around, both in our own groups as well as as Jerry's Grow My Thrift Savings, that you can cover some of that technical stuff if you want to go more into detail with that kind of information. All right. Now I do before I end this, I do want to talk about S&P futures, because as you saw, S&P 500 itself, SPX, you can't get volume information out of that. So, but what we can do is look at S&P futures, which does have volume data that we can work with and give us little clues there. So let's move on to that. Generally speaking, this is the volume information right here. This is the only thing I'm going to really show you on this side. Generally, though, as you see where the short-term drop, there's a little bit heavier volume relative to both sides of it throughout the drop. And then when it bottoms out right here, you still have volume there. And then once it starts rebounding, then the volume starts coming down and then starts building back up right there. Then that was kind of a sign that might have been a drop coming. And then, see, volume stayed mostly elevated through here all the way up to the bottom. And then as the prices came back up, the volume also dropped some. Same here. They have from the short-term high to the short-term bottom, had elevated volume pretty much throughout this period of time, and then it kind of normalized back to where it normally is. So what we're getting here is we're getting same activity here. We're getting elevated volume here relative to what we'd been seeing. And sooner or later, we're going to have this, we're going to have a rebound, which today could have even been the start of it. We don't know, but it looks like there's a possibility it could have been the start of a rebound. It remains to be seen. We could still have some downside follow through, but between the trend line and other indicators here, and not to mention the price, just the price in general versus what it's worth, I would be very cautious about moving out of stocks right at this moment. All right. Okay, but there are other indicators that people do follow, and everyone has their own buy and sell flags tripped at certain levels. They might have predefined set of price levels that they're looking for, even price pivots that I've talked about before that usually don't see a lot of technicians talk about. I'm not going to go into detail again on that, but I'm just saying there are other indicators that could give you reason to think that prices could continue down a little bit more below today's point, but coming up on that trend line, and also how far below the recent high we're already at, it's you're elevating your risk of making a bad move if you do decide to swing out on a day like today. So for that reason, I don't recommend swinging out today. If you're going to swing out at all, you should have done it closer to when it was at the 44.80 level. Whether it was just before it hit 44.80 or just after, it's a crapshoot no matter what. But with the earnings season mostly done, though, there's not so much fundamental investor activity to help keep pushing prices upward. So when there's not so much of them in the market, you get more of the technicians and speculators having a greater influence on market behavior. So and there's going to be a lot of I guess true behavior with what technical analysis does show and what you're likely to see. There's a better probability that what technicians are saying is likely going to happen will happen, just because you don't have so many influences from other types of investors playing and putting their hands in the pot. All right, so that's all I have for now. As always, always about education here and informing, whatever, helping you guys learn more about any of this kind of stuff. Do make your own decision. As I mentioned, I will not be moving my own money this dip. I would like to eventually move it from S to C fund, but still waiting for S to catch back up and outperform C. And I'll have to sit waiting patiently for that to happen. The more impatient I get, the more likely I'm going to get to I'm going to be to make a bad decision that could end up costing me even more. So better to just be patient, wait it out, don't make emotional decisions, don't be impulsive, just accept that sooner or later you'll get what you want. At least using my own strategy, and then if you're using a more standard swing trader strategy, which I am all for, and I do myself when prices are not growing at such strong rates. When you're getting 20+% growth rates out of stocks, it's not the time to be jumping back and forth between stocks and bonds. Maybe from one stock fund to another stock fund, but I don't recommend going from stocks to bonds when price growth is that strong. We're starting to get down, though, to where my last weekly update, I think I had it around 12%. So it is coming down, and I do expect that it probably will come down a little bit more with the growth rate, but it's still going to be positive, and it actually will become a little more favorable for swing trading, for standard swing trading activity between stocks and bonds and stocks. All right, so that's all I have. For those of you guys who might be watching this on YouTube and are not swing traders, don't worry about any of this. Just hang tight, stay where you're at in your stock positions. You're going to do just fine there. This is mainly oriented for the people who are just playing short-term strategies and want to know if right now is a good time to make a short-term move. All right, that's all I have. Well, thanks for watching. I'll see you guys next time.